Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. Welcome to part 2 of our interview of Barry James Dyke. Anthony, you want to give these guys a teaser? What can they expect?
Yeah, I would say Barry always does a great job. And you know what was interesting? After the last time we did the interview, Cameron had a hard stop to go do his hair. So Barry and I had a nice little chat for about 10 to 15 minutes. And one thing that I wanted to be blunt with him. The reason why I didn't ask on the during the interview, just out of respect for him, I'm like, Barry, I've been enjoying your books, but I can't imagine you're doing this for pure profit motive, because I know how much time it must have taken him to do that, and I don't know how much these books are selling, and I wanted to see really what was his why. And his why, he goes, you're right, I'm not making this isn't a profit motive, and in fact this has kind of steered me from making profits in my business to devote time for this book. But the reason why he did it is to spread the truth of what is going out here in Wall Street for his kids and grandkids, and also the same as yours. So I thought it was interesting to hear like the why of what he is doing. And hopefully you should go back and check out the part one. But let me do another plug for his book. In some aspects it's almost like a textbook, where he talks about these different four pillars, where he talks about the unicorns and private equity and such. But what I found was very interesting, he even has like some paragraphs and some pages about what certain companies are doing. And for me, I've always was intrigued on uh, Robinhood, which you may have heard of, that app where you can buy stocks at no cost. And to me, the thing is, if how are they making money,
Mm-hmm.
right? I looked up; they made $2.8 billion in the last 12 months
It's a big.
without charging for the trades. Where do you think that money is coming from? We can find that out in the book. And one thing the book talks about says, and which I love the saying, if you're not paying for the product, then you are the product. So I would encourage you to continue listening to part two, and also check out Barry's book.
Enjoy this episode of our interview. Barry James Dyke, esteemed author of Pirates of Manhattan 1, 2, and 3 is coming out, and their new retirement ruse. Enjoy.
Enjoy the episode.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad, along with Nelson Nash's infinite banking concept. Along the lines of cryptocurrency, you also mentioned kind of unicorns that Anthony opened up with.
See, he's trying to prove that unicorns are real. So I'm hoping you can set him straight.
Yeah, you kind of started going down that road, but you mentioned a unicorn as a private company with a valuation of $1 billion. In your book, you talked about just the frequency of the increase of unicorns over the last 10 years. I know you got a lot of stats in there, Barry, but do you remember kind of that section of the book when you talked about that?
Yeah. It was very small because I've been watching this stuff really ever since I wrote the first book and that kind of took off. But I've been watching these trends, and I subscribe to. I read a lot. I read a lot, and so a lot of this stuff, venture cap, alternative investments, really is the big thing now. And with all this government money printing and all this money going into government pension plans and university endowments or sovereign wealth funds, the money has to go somewhere. So it usually, most of the time, it ends up in Wall Street or in venture capital. It's kind of funny. The more things change, the more they remain the same. But if you look at where a lot of the speculation is today in America, is really always involves Wall Street and Silicon Valley. They're kind of interconnected at this point. And so all this money was being poured into all these crazy stuff, and the fact of the matter is, you can verify that 9 out of 10 of these new investments fail. I mean, I'm not making this stuff up. And so, but during the pandemic, when people have nothing else to do, they're pouring money into companies like, I think you mentioned Anthony, Robinhood, or if you will.
Mhm.
We can talk about that later. But so they're pouring all these money into all these companies, not creating anything of value. A lot of it's just financial engineering. It's another way to serve, to sell to debt, with buy now, pay later strategies, or
Mhm.
uh, you know, flying air taxis, or the autonomous cars, which is kind of the biggest kind of visual representation of the unicorn phenomenon. I mean, someone like Apple put 10 billion into their autonomous car, and they folded their tent. They had 2,000 people working there. I never knew that.
Neither
Did you
did I.
know, guys know that? They had 2,000 people working roughly on autonomous cars for like 10 years. And they just folded the tent. And so you have a lot of this companies like Cruise, which was the General Motors, which you and I, the taxpayer, bailed out. They get into all these little startups, and so many of them have failed. And so the reason why I'm saying this is that what you guys are doing is helping people just really having an honest system of savings, and also protecting the people they love and care about. And that's and that's one of the tragic things I see in the book. And that's why I know, guys, I don't know if you saw the one of the things on this book, which I talk about why we're such a laggard in world retirement preparedness. Did you guys pick that up?
Yes. No, that is a great. Well, I would, there's just so much to talk about. But since you brought it up, we have the largest economy, right? And you would expect that we would be the most prepared for retirement. Is that not the case?
We're third world. Third world. And yeah, it's a tragic. I mean, it's just I love this country. We have the greatest weapon system, and but the fact of the matter is, unless you're a very wealthy in this country, or you're a government employee, if you're a firefighter, teacher, or whatever, and that's another story into itself. Um, um, you're pretty much on your own, because the 401k, the IRA, it was never designed. It's not a retirement income plan. It's a high risk savings plan. Okay, it's not a retirement income plan. And so, and if you study the world systems, and I have, okay, we we're horrific. I mean, and again, I love this country. What I'm saying is that, but most people, and there was and I have this in the back of the book, and this is right in the back of the book, is that Alliance for Lifetime Income. And there was a guy by the name of Robert Shapiro who released a study, and it's April of this year. It's very, very fresh data. Um, that there's 30.2 million people turning 65 between 2025 and 2030. All right. And 2/3 of those people have no other retirement income other than Social Security. That's it. Niada, niente. And so the thing is that if you really want to have a nice retirement, you're better off be living in some place like Finland or Norway or the Netherlands, or uh, or England or Canada or whatever. They're much, much more buoyant. They have a lot more integrity than ours do. And it's a tragic, and it's not my research. It's Mercer, and Mercer out of Australia each year does a rating system looking at the sustainability and rates of return and things like that. And yeah, so what do you think we are in? Cameron, what do you think we are in the top 25?
I believe I know. Low 20s.
Anthony, you're the CPA.
22? Is it 22? 2
Yeah, we're 22. Yeah, so 22, 23, whatever. So so I mean, I think we're next to Kazakhstan. What are those? But so
Kazakhstan. Wow.
yeah, so I mean,
Barry, I just want this to sink in, right? America, oftentimes viewed as a world power. Again, we have the largest economy, but as far as being prepared for retirement, we're like a third world country. We are 22. Why do you think that is, Barry? And then then what can we do about it? Maybe we can pivot to some positivity.
Well, yeah, exactly. Because one of the ideas, and you can't confuse saving with investing. First of all, I think
Cameron's a big one, on words are important, and exactly what you're saying. There's a difference between savings.
There's a huge difference between savings and investing. It's a huge difference. But as far as the asset management industrial complex, it's all about investing. And if you read the Wall Street Journal and the New York Times and Barron's and all of them, I get them all. Okay, they always talk about investors. Well, these people putting money into a 401k, they're savers. They're not investors. And so even the investors really don't know what they're doing. But anyway, so there's a huge difference in that, and I think a lot of it's let's see, a lot of we're just gotten so far away from the fundamentals, guys. You follow me? I think you got to save before you invest, and you got to stay out of debt, or if you got to be more positioned to manage that debt. So what I salute what you guys are doing, because um, what's the used car loan now? You're in Vegas, whatever. What's the used car loan? 14% now, or something like that?
I don't know. I wouldn't know. I don't think they're that high.
If they are, and you guys are out there, you have a 14% loan, call me. I'd be happy to lend some money. To kind of add to what we were just talking about, there is Barry. After we kind of went through, stock buyback, cryptocurrencies, and then even the unicorns. After every little section there, I kept writing down who was winning. Right? Who's really winning in each one of these scenarios? Is it the individual, or who is it? And over again, I've written down insiders and asset managers and bankers. Right. And I think that's part of the theme of the book, and highlighting this to people is that, listen, there's, most people are blindly putting money into 401ks, IRAs, believing it's the best thing that they can do. And in fact, you read a book like this and you realize that, insiders, bankers, asset managers are making billions off of people's just negligence. And so I think that's our message to people is out there. Hey man, you got to start taking control of your finances. You got to take responsibility for this. Otherwise, you're going to end up being one of the 2/3 of the 30 million people that only rely on Social Security in retirement.
Yeah, and it's and the problem with this, guys, is that being in finance for so long, there's a real kind of lag for these problems to surface. So we know it's really bad, but I think we're going to see it 5-10 years from now. It's going to get really bad on that. I don't know. I'm not God, okay, but if I've been seeing how financial products and the problems, they take time. There's a lag before they get into the economy, and so that's why I'm kind of shouting about it now, because the crap that's gone on in 2021 and 22 and 23 and 20 and 19, stuff like that, it's going to expose its ugly head, which is starting to do now. I'll give you a great example. Do you ever heard of that company called 23andMe?
They all just, yeah.
Okay.
They're in the news just the other day.
Yeah.
Oh yeah. Okay. So that was kind of a classic case. It was started by one of the Wojcicki's. She was married to Sergey Brin, from Google, whatever. It was one of these DNA companies, whatever. Find everyone's DNA and the whole thing. I think they had like 1.67 billion or whatever put into the company, and it's all documented here. And they had a $6 billion valuation, and it's essentially the company is almost not worthless now, and so it was just in the news this past week, I think, because the 7 people on our board of directors said, we have no plans to take this company private. And so the reason why I bring that up is that there's numerous cases like this. I mean, dozens. And that's the reason why I had to put this stuff together, because people don't believe me, but a lot of these things are crazy. Another one, Falling from Space. You ever remember Virgin Galactic, the guy, Sir Richard Branson?
Yeah.
Sir Richard, yeah. Mr. Space.
Yeah.
Well, sir, so Mr. Space, he had 2 unicorn companies, Virgin Orbit and Virgin Galactic. And Orbit was the one, I think it was the one who dropped the planes into the atmosphere. Well, that one's already gone broke. And then he has the other one, the Virgin Galactic. That is today. Is today the 20th?
Yeah.
Okay, today. Okay, and anyone listening out there, okay. Today, Virgin Galactic is performing financial sorcery and doing a 40-to-1 reverse stock split. Now,
40 to 1?
A 40-to-1. They call it 1 to 40. I call it 40-to-1, which is the more financial engineering to keep the company listed on the stock exchange. Because anytime a stock falls below $5 on the New York or $1 below on the NASDAQ, generally they're encouraged to be delisted. So when you throw this into the whole crypto thing as well, is that this is making things even more complicated for people. But my point is that Virgin Orbit has already gone bankrupt, and Virgin Galactic, which was backed by Chamath, the old Facebook executive, he pulled out like $300 million, and Branson pulled out 1.4 billion out of Virgin Galactic, and now it's they just had to do financial manipulation to keep the stock listed.
Wait, did you say that those investors had pulled money out of the company?
Yeah. Because I was going over this with my assistants in the office yesterday. I said, "Look at no." I said, I remember correctly. Branson pulled out like 1.4 billion out of the company after they went public, and Chamath pulled out 300 million. And now I think the company has like a market. You can go on Yahoo and figure it out. I think the market cap of the company is maybe 187 million or something like that. So virtually almost not worthless, but close to it.
So who's the one left holding the bag? Who's the one?
It's a retail investor. It's a retail saver. And that's the whole thing. It's always this is why I'm so passionate about it. It's the retail saver.
Cameron, I appreciate that list of all the people that are winning of these transactions.
Yeah.
It's my understanding that those people are telling us that we need to invest and we need to save for retirement through Wall Street.
Yeah.
But is that what they're doing for their retirement and their long-term planning?
No. And the thing is that they're not. And again, I'm not against stocks or equities, guys. I'm really not. I mean, because we all need to have any society needs to have new ventures to grow. But these people are getting so wealthy that it doesn't really make a difference. And when you have certain scale and wealth, and I had I had dinner this week. It's a long story, but let me just put it easy way up there. And it doesn't really matter when you get to be as wealthy as some of these people, because even if you lose 100 million, it doesn't really make a difference to these folks. But this stuff is really so one of the stuff is this is just me. I think one of the greatest issues of today is economic inequality. That's just me. All right. Mm-hmm. There's only climate change and all that other crap, but I think really one of the reasons today, which we've gone from such a great country, which I love, I think the discrepancy. I mean, 90% of the wealth in the market is owned by 10% of the population, and I get that from the Fed. So, but one of the things is that, and then when they do have people saving in retirement plans, they're gambling with it, and the thing is that and there's no really recourse for the individual investor, and then they roughly more than 50% of all money, by the way, guys, even in 401ks now is in collective trusts. So it's not even subject to SEC oversight. So a lot of this stuff is really, so what you're doing is more holistic and telling people about what's really going on. I hope we can make it a little bit better. That's what my father always told me. He said, "You leave the place better than where you found it."
Mm-hmm. So, Barry, what are some of these companies doing for their personal planning? I mean, they're telling us to do one thing. Are they doing the same thing?
Well, when you find really wealthy people, no, I mean, and then a lot of the things which you find, like particularly in private companies, they'll have very conservative investments. Okay, they have so much money, they really don't want to lose their principal. I mean, they're using it, life insurance and annuities. That's one of the things which, even with General Electric, which is what kind of, it's incredible, is that GE, Jeffrey Immelt, who was the CEO of GE, destroyed the company. Him and Wells destroyed the company, turned the world's greatest industrial company into a bank. And but he retired. When he left in 2017, he left the GE with the $200 million compensation package, and $84 million of that was an annuity. So I'll take an $84 million annuity any day of the week, guys. I'll take an $8 million. I'll take a $4 million annuity. But he got he got essentially with $3-4 million a year for the rest of his life. And so and then also you understand too is when you have that much capital, you really don't need that much money to live on. So you're able to save more and more and more. And so most people, they need everything. Most people, unfortunately, in this country are living pay to paycheck. And so when you get some of the really wealthy, and again, I'm not against wealth. It's just that the allocation of capital, they can save a lot more, but it's very, very difficult because the money printing really benefits the upper classes. So now you guys, Cameron, do you guys have family? Do you guys have family?
I do. Yep, I've got 3 great, beautiful kids.
So I don't know about you and your wife, if they go to the grocery store, man. I mean, it's just. I mean, I'm single, and it's just, and I had to get some stuff last night. I was like $86. I said I didn't get much of anything.
Yeah.
You know what I'm saying? Of the young family. So so we see the inflation in food prices and all real. So a lot of the stuff really, I'm just trying to help people become better prepared for this stuff because the massive inflation we have. I live here in the Northeast, where I live in a beautiful, beautiful area in New England. But median price of a home here is $905,000.
The median.
Who can afford that?
Now, Barry, you've presented, and with all of your books, particularly this one, some great information.
Yeah,
I will say it can be a little disheartening to kind of see like what is going on, and I'm sure there's a lot of people there's like, well, man, what the heck do I do? Like, so what are some things that you recommend people where they won't be financially burdened by this ruse of retirement?
Yeah. So, first of all, I always tell people have my 5 F's, which is it was the most important thing in my life is that, and I'll tell this to anybody, I've said it on national radio, the faith, my faith is the most important thing in my life. My relationship with God, whatever. I'm a Christian. I don't care who knows about it. Family is obviously really important. Friends are obviously important. We never get anything on our own. Physical fitness, okay, staying in shape and really, is really, really important. And finances last. So I think those are kind of my priorities, if you will. In my faith, my family, my friends, my physical fitness, and then my finances really last. But when it comes to financing, I think, Cameron, there's a big difference between saving and investing. And all of it today, whether it be Kent Fisher, who's an idiot, by the way, and he's not going to like this next book I'm coming out with, who says annuities are really bad. He's an idiot because he hasn't done the research. I have. So, but the thing is that, first of all, you want to save, and you don't want to over leverage yourself, because anytime you get an individual or a family or a business or even a state government gets in too much debt, they go into default, bankruptcy, and so forth. But governments can print their way out of it. So what has happened? But if you're a financier, you're a venture capitalist, or in private equity, you can use debt as a weapon, and you can create up phantom entities and funds and things like that. So if you bankrupt a company, it doesn't really affect you personally at all. So 98% of the population cannot pull that off, but these folks do. And that's where you're talking about stations and stations and which is now Red Rock and Caesars Entertainment and so forth. The stuff they go, if you want to read that book on Caesars, it's just appalling what they've done. But most people can't do what they're doing. So that said, is that so one of the things really save before you invest, and then and then have good habits and make them your master. And that makes sense. If you're gonna not against and most people make money is in small businesses. They don't really make in the market.
Barry, one of the, I think, big themes about this book that I took away was that really the intention of people saving or putting money into 401ks and IRAs is that income in retirement, right?
Yeah.
And I think this book lays out the fact that that is absolutely in peril and probably not going to work out that they're the way that they're planning on it working out if they're going to take that traditional path. And so I think maybe you correct me if I'm wrong here, but you may be setting us up for the next book, right?
Yeah, that is correct. That's why guaranteed income too. Everyone, and actually, Brian Engel, who did the forward of the book, we were discussing this the other day. Everyone wants to have part of the solution, and that's what I'll be focusing in on the next book, and because getting at this and the problem of the Wall Street casino and the 401ks and indexing, which is huge now, which is a major problem. But about using how to construct retirement plans using annuities and life insurance products and so on, and using only mutual and fraternal companies, because the entrance of Wall Street into the insurance business through private equity is somewhat frightening, and it is frightening, so this is the So that said, so I'm recommending a more conservative approach for people coming into retirement, using these companies, which are not so great for the advisors, okay, but they're really great for the people. So I feel if we help people do the right thing, the volume will come. So
great, love it. We got you got two books that are kind of coming out soon: Guaranteed Income 2, and we also got Pirates of Manhattan 3. Barry, when these come out, we'd love to have you back.
That'd be great, guys.
All right. Thanks so much.
Thanks, Barry.
My pleasure.
Go make it a fantastic day.
Take care.
If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.